The average investor should ask himself or herself, what do you have in your portfolio that has this kind of track record, number one, is very, very underpenetrated, can provide a service of insurance against financial catastrophe that no one else can provide, and can go up 10 times or 50 times? The answer is nothing.
What does Bitcoin mean to you as an investor? Are you in it because everyone is talking about it, or because you see something special that you do not see in other assets in Bitcoin? Or are you set against it because billionaire investors like Warren Buffett and Charlie Munger seem so set against its value as an asset? Despite its many success stories, many billionaire investors are still skeptical about the value of Bitcoin as an asset. But for every one billionaire that continues to live in doubt, there are people like Bill Miller, who believe Bitcoin is pretty valuable, much more than any other asset in recent time. In fact, you might have heard of Bill Miller, but if you have not, he is the founder, owner, and chief investment officer of Miller Value Partners. He also holds the record for beating the S&P 500 index with his Legg Mason Capital Management Trust Fund for 15 consecutive years. Bill Miller is a billionaire investor and baby boomer, two attributes that many anti-Bitcoiners often possess. However, Miller is a baby boomer like no other. This brilliant American investor and fund manager has 50% of his personal investment portfolio in Bitcoin. In a recent interview, Miller confirms that both his trust fund and personal investment portfolio contain generous amounts of Bitcoin. The investor also explains why he has chosen to invest in Bitcoin and why others like Warren Buffett are wrong in their assessment of the digital asset. You are welcome to Savvy Finance, a channel dedicated to bringing you regular updates on the crypto space through tweets, interviews, feature articles, and many others. In this video, we examine all the important parts of Miller's interview. So be sure you watch it to the end, click the like button, and subscribe to the channel. Let's get started. According to Miller, he got started on Bitcoin after listening to Wences Cassairs, also known as Bitcoin's Patient Zero, at the annual Sun Valley Media and Tech Conference in 2014. The conference is usually a gathering of top political figures, business tycoons, leading athletes, philanthropists, and investors. During his interview, Miller explains that Cassairs had asked people if they had any Bitcoin or even they had heard about it at all. Only a few people had heard about Bitcoin and nobody in the audience held any Bitcoin. Cassairs then sought to remedy the situation by introducing the group of top American investors and political figures to the peer-to-peer technology. Using personal experience, Cassairs convinced Miller of Bitcoin's value as an investment asset. Luckily for Miller, he got on board when Bitcoin had been only $200. Listen to Miller recount the experience himself.
My thinking here was that I heard a talk on Bitcoin given by the person who's known as Patient Zero in the Bitcoin world, Wences Cassairs. And Wences gave a talk at the Allen Company Sun Valley Conference, and he led off his talk, this is 2014, I want to say. He led off his talk by saying that, asking how anybody owned Bitcoin. No, nobody in the audience owned it, except for him. And did anybody know what it was? And a few scattered hands went up. And he said, well, let me explain to you why I own Bitcoin. And he said, and it's because I understand why you wouldn't understand it, because you all live in America. And you have a rule of law, and you have orderly governments, and in most times you have relatively low inflation and a prosperous economy. And he said, but I'm from Argentina, and my family's been there 150 years, and we've been wiped out 4 separate times by the Argentinian government, seizing our assets, nationalizing the banks, inflating us out with hyperinflation. And he said, so Bitcoin can't be touched by the government. It's a peer-to-peer, decentralized, independent network. It's a ledger that records every transaction that's public. It's immutable. And he said, so the government, if you have Bitcoin, the government cannot take it away from you. And he said, so think of it as an insurance policy. And he went into it and talked about it. And I thought, and he talked about putting 1% of your liquid net worth in Bitcoin. And I thought that was sensible. He laid out what it could do if it worked. He said then that it was very risky, because then it was about $200. But I bought some then, and I bought a little bit more over time, and it became $500. And then I stopped buying it. And I didn't buy it for years until just the spring of this year. It hit a $66,000 high price. And then in 4 weeks, it was in half. Now, Bitcoin has gone up on average 170% a year for the last 11 years. Now, but that's not every year, it's just an average. It's gone down 3 different times by more than 80%. So that is, a very volatile and therefore very dangerous especially if you're levered, as you can be if you're on some of these exchanges that'll loan you 50 to 1 on on your Bitcoin. But each time it's been stopped at around the low 80s level, and it's come back. And this time I started buying it again at $30,000, down from 66. And my reasoning was, there's a lot more people using it now. There's a lot more money going into it in the venture capital world. There are a lot of people who are skeptics who are now at least trying it out. And I thought maybe 50% is a good stopping point for it. But if it goes back down to 80 or 85, I'll buy it all the way down. Well, it did stop right around 50% and slowly started its way back up again. But I bought a fair amount at the $30,000 range, and have been adding to various Bitcoin-related investments since then. So there's a company that that we own in our income fund called Stronghold Digital, which is a Bitcoin mining company, where the CEO owns 35%. It looks like they could make $6 to $8 in a couple of years, and they're a very low-cost miner of Bitcoin, and all their energy that they're using, the electricity usage, is all renewables, or it gets credits for cleaning up abandoned coal mines. So it's one of those things that, I mean, as much as I like Bitcoin, I've bought Stronghold in here and own it also via the fund, as well as MicroStrategy and some other companies.
Miller also gives reasons why he has made Bitcoin half of his personal investment portfolio. He explains that Bitcoin can be described as a digital gold, but with more value. While the Roosevelt administration had been able to confiscate people's gold in the early 1930s, Miller explains that Bitcoin is completely safe from all forms of government interference. He also takes down Warren Buffett's argument that Bitcoin has no intrinsic value. As such, it is an unworthy investment. Miller explains that there are many millionaires and billionaires who would throw millions of dollars on paintings, which in themselves also have no intrinsic value. He also points out another great attribute of Bitcoin, its limited supply. Miller explains that Bitcoin's supply has already been capped at 21 million, and nothing, not even increased demand, would increase the supply. Instead, as the supply gets thinner and demand increases, prices would skyrocket. Here is Miller explaining his reasons for investing so generously in Bitcoin.
I would say that right now, it's best thought of as digital gold. So gold is, as people have said, a store of value for 5,000 years.
Right.
And gold is what people typically fled to when the governments tried to inflate them out. And in the United States, Franklin D. Roosevelt confiscated everybody's gold in 1933. You had to turn it in or you went to jail. So they can't confiscate your Bitcoin because there's nothing, you hold it securely. As long as you have an internet connection, you can send it somewhere instantaneously at very low cost. And the reason I like the insurance company analogy is because if you think about, people talk about the intrinsic value of Bitcoin. This is a Warren Buffett argument, that Bitcoin has no intrinsic value. It doesn't have any earnings. It'll never pay any dividends. And so how do you even think about something like that? It is a new technology. It's something that couldn't be done before. But in any case, the answer that I have to that is, well, I mean, what's the intrinsic value of that Mickey Mantle baseball card that sold for $5.5 million? It's just cardboard, and it doesn't even have a legend. It could be counterfeited very easily. Or what's the intrinsic value of a Picasso painting, which is just canvas and paint and maybe a frame? But people will pay millions or tens of millions of dollars for it. And so it comes down at the very basic level for supply and demand. So Bitcoin is the only economic entity where the supply is unaffected by the demand. So even with gold, if gold, which is $1,800 today, if gold goes to $18,000, there will be a lot more gold mined because mines that are unprofitable will become profitable. And so gold, which accretes today, the production of gold is equal to about 1.5% to 2% of the total value per year. That's the same accretion that Bitcoin has currently. But this year, 2022, I think will drop below 1.5% on that. So only 21 million Bitcoin can ever be created or close to it. It doesn't matter if Bitcoin is 100,000 or 20 million, there's only going to be that many of them. So all you have to really believe is that the demand for Bitcoin will grow faster than 1.5%, over the next number of years, and the price inexorably will go up. So I've only recently been allowing myself to be described as a Bitcoin bull. I used to tell people, they say, "Oh, you're a Bitcoin bull. You own a lot of Bitcoin." I'm like, I do own a lot of it, but I'm actually a Bitcoin observer, and I'm observing its trajectory as a new technology and comparing it to the trajectories of things like the printing press or the steam engine or the railroads or the automobile or electricity, and it's following that very not predictable, because it's not predictable certainly in the early days, a well understood path for the adoption of new technologies. And I think it was Stan Druckenmiller said earlier in the year that, and now he owns Bitcoin, by the way, but he said that Bitcoin was a solution in search of a problem. And what I've found amusing about that is every new technology is a solution in search of a problem. Because you have a new technology, then you try and figure out what you're going to do with it. And so, when we created the internet, what are we going to do with that? So the Defense Department had good uses for it, but it was tough for other people to see. But now everybody can see what the value of the internet is. Same thing with the internal combustion engine, which was very dangerous and all, but now that's taken over the world, and now we're going to move to electricity. So all kinds of technologies have to grow into their potential. And Bitcoin is, I guess if you want the theoretical answer to the question, is that's the work of Brian Arthur, Santa Fe Institute, and Stanford, who is kind of the leading authority on what he calls increasing returns economics and what he calls lock-in and path dependence in the economy. So his basic idea is that when technologies reach a certain dominance and they're the leader, it's almost impossible to dislodge them, even without a very superior technology.
And Bitcoin's there? Is that what?
That's what I would say I and the other bulls believe.
Okay.
If you think Bitcoin is just an asset, Miller says it is much more than that. To him, Bitcoin is an insurance policy against political and economic crises. He cites the example of the financial crises in Afghanistan afterwards the U.S. troops left. He also cites the example of the coronavirus pandemic, which had sent the traditional financial sector to a screeching halt until the government had to intervene by printing more money. While Bitcoin had been affected during the peak of the pandemic, it continued to survive without any intervention from administrators or central banks. For these reasons, Miller says he believes the asset is a must-have insurance policy against unforeseen circumstances. Listen to the Billionaire's apt description of Bitcoin's qualities.
There's 21 million shares of this insurance company outstanding. And every day that somebody wakes up and says, I need some insurance in case something, in case the government seizes all the gold like they did back in 1933. Or, when Afghanistan, we pulled out of Afghanistan, Western Union stopped remittances. So if you couldn't get money, and it's still hard to get money in Afghanistan, you were in serious trouble. In Lebanon, the lira has completely collapsed. Venezuela is a failed state. And yet Bitcoin continues right along. That was your insurance policy against financial catastrophe of one sort or another. And what did the Fed do when the pandemic shut down all parts of, or threatened to shut down all parts of the economy? The financial markets came unglued, and the normal relationships between cash and bonds and securities, especially asset-backed securities, got blown apart. And the Fed had to increase the money supply by 25% to keep those things from collapsing as they did in 2008.
Right.
During that time, the Bitcoin network functioned perfectly. There was no run on it. There was, prices went down initially until people figured out, wait a minute, we've had a tremendous collapse here, and the Bitcoin blockchain is functioning without any interference at all. So I think that explains it, I think, in a way that many people can understand. If you want a little bit of financial insurance, then buy a Bitcoin or a part of a Bitcoin. The argument I get most often is, why not gold?
Right, which is considered to be an insurance policy against catastrophe historically.
So the answer to that is, in my opinion anyway, gold has gone from been around 5,000 years, so it's gone from, make up a number and say a dime, a nickel in today's parlance. And in 5,000 years, it's gone from a nickel to $1,850. So why would I own gold? Especially since gold in the last 10 years has gone down. In the last 10 years, Bitcoin is the best performing asset category in the world.
The billionaire investor also believes that everyone should have at least 1% of their portfolio in Bitcoin. This way, one would not feel too weighed down if the coin's price drops 50 or 80% as it has many times in the past.
What's your one investment for a long-term diversified portfolio?
Well, I'd have to say Bitcoin, because very few people own it. If you put 1% of your assets in it for diversification, you can afford, even if it goes to zero, which I think is highly improbable, but of course is possible, you can always afford to lose 1%. But I think the average investor should ask himself or herself, what do you have in your portfolio that has this kind of track record, number one, is very, very underpenetrated, can provide a service of insurance against financial catastrophe that no one else can provide, and can go up 10 times or 50 times. The answer is nothing. So perhaps you should have some of this. And certainly if you own any gold, you should have some of it. But 1% I think is prudent and sensible, and but I think will do very well for people.
Before the video ends, we leave you with Miller's analogy that we believe might help people cope better with the market's current situation.
And one of the things that we know, and it's been proven over and over again, is that the coefficient of loss to gain is 2 to 1. So a dollar's worth of loss in the market is twice as painful as a dollar's worth of gain is pleasurable. And as Warren Buffett often says, fear is contagious and spreads rapidly, and confidence only returns slowly, one person at a time. But what that means is when you have very dramatic negative events, that people tend to overreact to them, and that those are, they're rare, but they're perfect buying opportunities.
Instead of examining the negative effects of a $42,000 Bitcoin, why not buy the dip? However, ensure you only put in what you can conveniently afford so nasty surprises do not make you bankrupt. Thanks for watching the video. If you have not, remember to hit the like button, drop your comments below, and subscribe to the channel.